Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Jim, last week in part one of introducing the 2025 KRO Favorites Collection, we talked about the first 9 companies on the list. Today we're going to talk about 6 more, and then in part 2, and then early next week we'll talk about the remaining 5 in part 3.
How has the new year greeted the KRO 2025 Favorites Index?
Well, when I looked at how it had closed on Thursday, January 9th, I was pleasantly surprised to see that it was up 7.1%, and that's for 20 companies. But then I looked a little closer and realized that one of the favorites, PJX Resources Inc., which we are going to talk about today, it had managed to wake up from its year-end slumber. It had been bashed down to 10 cents by both tax loss selling and forced flow-through fund selling, and somebody this past week suddenly just said, let's start buying the stock, and it's gone from 10 cents to as high as 17, 18 cents ahead of an update from the company about what they accomplished last year and what's going to happen this year. So aside from that, everything is just sort of up and down. It's not really a big deal so far. And when I looked at the TSX Venture Resource listing traded value, which I find as a very useful indicator of the health of the market, the traded value during the first week or so of January, it is still low, similar to what it was in December, and well below the levels that prevailed in September, October, when the market was starting to think that maybe it should take the gold price seriously and start mapping it to the resource juniors. The other thing that sort of struck me was that the day before the U.S. election, that seemed to be a turning point in the fortunes of the resource juniors. Now, up until the early November, the percentage of resource-listed traded value on the TSX Venture Exchange had ranged to between 50 and 80% for most of the year. And that changed right after the election, and since then it has been mostly the non-resource listings that have been in the 50 to 70% of traded value, and this has persisted into this year. Now, obviously, a big driver of that was Bitcoin charging through $100,000. It has pulled back below that since then, but the market has realized, Trump is now fully behind Bitcoin. He wants to make the United States the cryptocurrency capital of the world. So there's going to be a lot of support for it. And so far, there is no evidence whatsoever that the Trump administration understands the vulnerability of the United States to raw material supply that comes largely from global East nations, and what doesn't come from them largely comes from global South nations. So the resource juniors, the resource sector in general, has been sitting back, wondering, when are they going to light a fire under our sector and realize that we're really quite important. So the way I interpret this almost non-January effect to the new year is that the market it sees all this enthusiasm about how after a couple years of 20-25% gains in the general equity markets, we're going to see more of the same this year, and but they don't know what policies Trump will actually enact once he takes charge on January 20th. And kind of perversely, the resource juniors, or even the resource stocks in general, are being treated as a contrarian type of interpretation. So they say, well, we're not going to touch these, because if the general market has a major serious correction once Trump starts telling us what he's really going to do, these will get killed just like they did in 2008 when the financial crisis hit Wall Street. So we're stuck with this attitude. We just have to wait and see what happens. Now, the reason I'm kind of skeptical that this will be a good year for the general equity markets, I'm looking at this strange relationship between Emperor Musk and President Trump. And we see Emperor Musk interfering in the politics of countries such as Germany and Great Britain. And, well, he's a self-appointed philosopher king. If there's going to be any meddling in other countries, shouldn't it be the not quite so rich elected president talking about this? So I see this as a potential conflict that could destabilize the market. And there's also this business about deporting all these undocumented aliens. I don't think anybody will deny that when you ship all these people back to where they came from, these crappy jobs that they do, America's Proud Boys are not going to do that. So there will be problems with a lot of these, the agricultural jobs, the service industry jobs, the meat packing jobs. And the MAGA movement kind of doesn't really appreciate that. But what they do appreciate is that there's something wrong when Emperor Musk says we need to have these H-1B visas for people from India. Americans are in general stupid. We don't get enough workers capable of doing all these high-tech jobs. India's a giant country, 1.5 billion people, actually now the most populous country in the world. And there's a lot of smart people there, and their income there and prospects there are relatively poor compared to America. So we need to bring them over here. And, of course, if you really look hard at this, what they are doing is they're bringing these people in on these visas. They're paying them a lot less than they would need to pay an American worker, an American citizen. And because the individuals their visa status is tied to the relationship with the company, the tech sector basically has a hammer over these workers. So the MAGA movement is not quite happy with this idea that, we're going to ship all the undocumented workers away, leaving jobs that most Americans don't want to do, and yet we're going to bring in these other people to do jobs Americans do want to do, but the tech sector doesn't want to pay them what they actually deserve. So this may create a conflict between the MAGA movement and the tech sector, which could destabilize the Magnificent Seven, which have been the primary driving power behind the gains from the past couple of years. So I think how this all plays out could have consequences for the market that puts it into a downtrend. And I think this time around, because the resource sector is so beaten up, I don't think they'll be the roadkill that they were in 2008 when they had been cranked up by the China super cycle. It's disturbing to see that this week I watched the Australian thermal coal price and the iron ore price dip lower. Now, these are commodities that are part of China's economy, and China's economy is ailing. And what I think we're seeing is already evidence that there is a global economic slowdown coming, which, if there are extreme tariffs enacted by the United States, will probably get worse, because reshoring manufacturing to the United States is not really an overnight job. Plus the fact that there are midterms in 2026 that might change the composition of everything. Manufacturers are not going to be in a super hurry to do this. So China's problem is that it has been so dependent on its real estate development sector and its export economy that it has neglected to cultivate its domestic consumption market. And ironically, if Trump does bring in brutal tariffs against China, that will be a necessity that forces China to really start boosting domestic consumption, because it cannot stay dependent on the biggest economy of the world to ship stuff there. It needs to light a fire under its own economy. Now the other thing that that was an interesting development this past week is that Prime Minister Justin Trudeau finally resigned. And this is amidst all this bluster by Donald Trump about how he's going to make Canada the 51st state. And everybody says, well, he's just trolling Canada because he thinks Canadians are a bunch of losers and he has no respect for the Prime Minister. But I'm looking farther down the road, and if this conflict between Global West and Global East does really become extreme, and the raw material supply that the United States and other Global West nations depends on dries up, there's going to be a lot of anxiety within the United States as to where to get this. And the idea of annexing Canada is not like what Hitler blathered about in the 30s, that Germany needed Lebensraum. No, what America needs is a secure and growing supply of raw materials in a secure jurisdiction. And Canada is about as secure a jurisdiction as you can be. But the Canadian government during the past decade has almost decided, well, we're not going to be a natural resource exploitation economy. We're going to be a reconciliation of First Nations economy. They signed on to UNDRIP, elevated the First Nations to a race, a DNA-based aristocracy that has a final say on what happens to Canada's natural resources. And everything has become bogged down in these endless permitting cycles where we have this triple whammy where the funding cycle, the permitting cycle, and the seasonal cycles that come with exploration in Canada are all misaligned. And this has really hurt the resource junior sector. So Trudeau stepping down, giving an opportunity for Canadians to rethink what's important. I think this is an important milestone, because if Trump's policies do create this serious situation where all of a sudden raw materials are not flowing to America that it needs, it's going to look north and say, why are you guys not exploring and developing your mineral deposits? I mean, we don't care that you're not doing it with oil and gas. We got plenty of oil and gas. We're the biggest oil and gas producers in the world, and we have plenty more that we can produce. But these other metals and minerals, we're kind of deficient in that. So why don't you wake up and get going, or we will, in the name of national security, have to annex Canada and just say, rip up the UNDRIP agreement and tell everybody, you're all the same, you're all conquered people, do as we say, start exploring and looking for it. So Canada really now has to wake up and say, you know, Trump's already threatened to destroy Canada's manufacturing sector through tariffs. Canada has to go back to its natural resources and start supporting them. And if this actually happened at a federal government level, and all these bureaucracies that are obsessed with Canada as an exceptional place where mining gets done elsewhere rather than in Canada, there has to be a sea change in attitude to that. And that might get the financial sector to look a little harder at the resource juniors, and also the regulators to stop treating the resource juniors as something whose exploration efforts and funding efforts they need to stymie.
Why have you put P2 Gold Inc. back into your favorites collection?
P2 Gold is a company that Joe Ofsenek and Ken McNaughton adopted several years ago after they left Pretium, which was a spin-out from SSR Mining to develop the Bruce Jack deposit in the Golden Triangle. And this ended up, despite some controversy along the way, being bought out for $2.3 billion by Newcrest. So these two guys who were the driving force behind this, Joe is more the sort of money guy and Ken is the exploration guy, they became heroes. But then what happened afterwards when they went to Bay Street with their new Shell P2 Gold, they optioned a number of projects in the Golden Triangle, but they also optioned the Gabbs copper gold deposit in Nevada from Waterton, which was this entity that after the crash of 2008 and the bear market that ensued for the resource sector, they had acquired all these various deposits that other juniors had developed and then gone bankrupt or ended up in the pennies. And so they had this big inventory of these projects. And Ken and Joe said, the gold and copper grade are not obviously super. And this was, of course, when gold was still below 2,000 and copper was below $4. But if these two metals are going to end up with higher real prices, this project could go into production, and it has at depth the untested exploration potential where there could be a lot more going. So they acquired this on pretty difficult terms and thought that this would be a piece of cake to just get done. They put their own money in. I think they put over $5-6 million of their own money in when nobody wanted to participate in the financings that they amount. So these guys have skin in the game, and in the eyes of the market, they've gone from heroes back to zeros. And in the past couple of years, they have gotten rid of all their other projects where they had balloon auction payments coming. They renegotiated the terms with Waterton. Waterton is now a 16-17% shareholder, so the future of the project, it's in its interest that these guys do something with it, and title will be 100% secure. The money's in the bank to take care of it. So the danger, something that had worried me, which is why I dropped them from the favorites a couple of years ago, the threat that they might lose this property because they default on these terms and a hard-nosed entity like Waterton says tough luck, that danger is pretty much gone. So the company has reduced back to this project. They did an updated PEA. Now, they've been playing with various development scenarios. The latest one is one where they would open pit mine the gold-rich cap, which is has a lower copper. They would heap leach that. And when that is done, they would switch to underground mining the sulfide copper ore where the gold grade is lower. So they developed a mining scenario for this, and they put out the PEA, and they used $4.50 copper. Yes, copper was almost $5 a pound earlier in 2024, but by the time the PEA came out, it had dropped below that. So they were using as a base case a copper price that was above the spot price. And at that $4.50 price, the project's economic numbers clear all the hurdles, a 21% after-tax IRR, and an after-tax NPV of $550 million at 5%, which compared to the capex of $367 million. So that was okay. It was clearing all these hurdles. But when they used $4 as a sort of lower base case price, the project only had a 14.4% IRR, and the NPV at 5% was $327 million. If you use 10%, it was $105 million. And for a project that's a copper project, you can't really use 5%. So clearly, the project at what is roughly the current spot price for copper does not clear development hurdles, which is why the stock sits in the 5 to 10 cent range. And the market's in essence saying, well, copper and gold price, the current gold price is not real. And incidentally, they used only $1,950 for the gold price, whereas gold's now $2,600 to $2,700. So these numbers need to be redone. But again, the market doesn't think the gold price is real. It thinks it's going back below $2,000, and that's why it doesn't dare plug these numbers into these discounted cash flow models and take seriously the NPV that comes out when you do this. So I have made P2 Gold a favorite, though it has a bottom Fair Spec Value rating, because at the current metal prices, the big missing piece is that we need a higher metal price, but it is a proxy on the future price of gold and copper. And I believe that there is a period coming where the United States is going to become intensely interested in finding and developing more copper supply within the United States. That inflection hasn't happened yet, and as I said, earlier, the Trump administration really doesn't quite understand its vulnerability to where metals and minerals come from. So the company is right now focusing on doing more metallurgical work, tweaking the flow sheet, the whole sequencing of this, and also doing the tedious work to get a plan of operations so that they can kick into a feasibility study sometime by the middle of 2025. And again, it's a speculation. What are Trump's policies going to do for the future prices of gold and copper? And P2 Gold, with these highly experienced and successful individuals at the head of the company, it is an excellent way to place a big picture bet, which if the big picture starts to evolve in this direction, these are the people who will suddenly be adopted by Bay Street, rediscovered, and they will be turned from zeros back into heroes because everybody knows they've done it before, and so they can do it again when the wind is blowing in the right direction.
Why have you continued Patriot Battery Metals Corp as a favorite, but none of the other lithium-focused 2024 favorites?
Well, the Patriot Battery Metals has a world-class lithium deposit in the James Bay region of Quebec, 109 million tons so far of 1.46% lithium dioxide, and they also completed a PEA in August, and the market looked closely at it. The nameplate number was like a $2.3 billion US NPV. That looks really good. The mining plan made sense, but when you looked a little closer, the base case price that they were using, which was $1,375 per ton of spodumene concentrate, well, the actual spot price is $840 a ton. 60% or so of what they are using is a base case. And the market these days, in a bear market, everybody looks at the spot price and says, well, if your project doesn't fly at the spot price, it's dead in the water. It's worth nothing. And the stock has ended up it was down in the $2.50 to $3 range. But then there was an interesting development late last year, which is where Volkswagen decided that it would invest $69 million Canadian to acquire a 9.9% stake in the project, and it secured offtake rights whose pricing would be based on some sort of complex formula based on actual prices. And this thing wouldn't be into production until sometime in the latter part of this decade. And so, in a sense, what Volkswagen was saying is, we believe the electric vehicle sector will continue to be important. We've got a gigafactory that we've got going in Canada that will be a major maker of lithium-ion batteries. We've also got a partnership with a company that's working on a solid-state version of the lithium-ion battery. And the solid-state battery is really the holy grail for the global West market to start to truly like electric vehicles beyond the elites who can afford to have an ICE car and an electric vehicle. So it is the most advanced, best company, lithium company in amongst all these juniors in North America. The deposit is the biggest in the Americas, and while it's not as monstrous as Monando in Congo, which that'll never get developed, or Greenbushes in Australia, it is still way up there amongst world-class deposits. And within that corridor that they have with all those pegmatites in it, I'm pretty sure that they will eventually double the resource. So Patriot Battery Metals is my proxy for the big picture speculation on what is going to happen to the electric vehicle future in global West markets. China has got its own sources for lithium. It's definitely going EV all the way. There will not be too many ICE cars sold in China by the end of this this decade. But if the global West market adopts the electric vehicles and replaces the internal combustion engine, this deposit, Jackie Chu Shawan, or whatever they call it, Jackie Chu I call it for short, it used to be called Corvette, it's going to be a major part of that supply. As for the other two that were in the last year's favorites, Brunswick Exploration and Winsome Resources. Winsome Resources has a resource, but it is lower grade, around 1%. They are trying to shorten the development timeline by using the former Renard Diamond Mine site as a place to develop it. I don't know where that exactly stands, but their project is even less in the money than Corvette. And Brunswick, it's basically still an exploration company, and I put that one into the bottom fish collection to wait and see what they do with the money that they raised last year. But yes, Patriot Battery Metals is my proxy for the future of lithium demand, which I still think will grow 6 to 12 times by 2030.
Why have you continued PJX Resources Inc. as a bottom fish rather than Fair Spec Value rated favorite?
PJX Resources was a bottom fish in late 2023 that caught my attention when they reported finding these classic SEDEX-style boulders with Sullivan-type grades for zinc, lead, and silver on the Dewdney Trail project in southeastern British Columbia. And of course, it was a very bad time in that October-December period of 2023, and they ended up having to do financings at 10 cents, including flow-through financings with a variety of funds. But they thought, well, everything would work out because we're going to have our drill permit, and we're going to be drilling by June when the snow is off the range that sits above where they think these boulders spilled from on this mountainside. But it turned out that because of Canada's consultation processes and the notion that we really want to slow down permitting of exploration, they didn't get their permit until July of last year, and then they ran into some logistics problems because of the timing. They didn't get drilling until mid-August, and when they started drilling from what they had selected as their drill sites, they pretty quickly realized, where we had surmised this SEDEX horizon to be located, it's not really there. What they encountered was evidence supporting that this is a major Sullivan-type system. They're into like the hotter vent material, which is lower. It's not going to be mineralized much with zinc and lead. And when the market realized that, this is not going to be instant gratification, the stock sagged and eventually finished the year at 10 cents. I think next week they'll probably put out a big press release updating everything that was accomplished. There's not going to be any barn burner discovery holes, intersections in the results, but they will now have had time to understand where they should be drilling, and they will be part of my session on Friday, January 17th in Vancouver at the Metals Investor Forum. And what we're all hoping for is that they can give us a good visual demonstration of what they did last year, what they were thinking, what the results tell them that they should have been thinking. And when they go back in there in June or so, they will have a full season with targets that they know where the source of these boulders are to be found. Because these boulders, the source remains still a mystery, and they now have some good ideas and arguments as to why those ideas are going to work. Last year, they basically just had surface geology to place their bets on. So the stock, I think, woke up this week because that flow-through overhang that had to be liquidated by those funds by the end of 2024, and the whatever grumpy tax loss selling from those who bought between 20 and 30 cents was over. Somebody said, okay, this is a new season. We get the vibe that they do know what the word's going to be, and this is the year that they pull a discovery hole that says, wow, at Dewdney Trail, we finally have a new Sullivan 2 discovery. And this stock has the potential, if they show that there is scale to whatever it is that they intersect, this stock has the potential to reignite Canadian interest in an old-fashioned exploration type play.
Why have you made Silver North Resources Limited a 2025 favorite?
Silver North Resources has 2 silver prospects in the Yukon. One is the Tin project, which is in southern Yukon, and that it has optioned out to Coeur Mining. And Coeur Mining can earn 51% by spending, $4 million or something like that. But then it can go to 80% by delivering a feasibility study within 3 years, which, given the permitting cycle and everything in Canada, that is not technically feasible. So they will never earn 80% unless the deal is rejigged. But they did do some drilling, spent apparently close to $1 million this year. They have not reported assays yet. In fact, they don't even have them yet because they've been so busy with their Silvertip deposit. And both, which is on the BC side of the border, both of them are carbonate replacement type zinc silver rich deposits. But what they did report and what they intersect, and they ended up drilling more holes than they planned, is evidence of this is truly, Tim really truly does have a large carbonate replacement system, and there may even have been some intervals in there that deliver some fancy numbers. So Silver North Resources has the potential to get a bump this year when these results are finally disclosed and Coeur Mining reveals what its plans are for Tim. And of course, work there doesn't really start until late June, so Silver North will be in a holding pattern until then, unless we start seeing a silver uptrend and people look for silver plays. But the main reason I made them a favorite is that on their Haldane project to the west of the Keno Hill operations that used to be owned by Alexco but are now owned by Hecla, it only managed to drill 3 holes, and 2 of those established that a fault, the main fault to the east of where they do have these high-grade Keno Hill type of lens intersections, also has similar high-grade intersections. So the market completely ignored that at the end of last year when this came out, but they now know exactly where to go back and start stepping out in this zone. And these types of deposits that are hosted in these quartzites, there are these structures that rip through there, but it's where there are these jogs in the structures. That's where you get these almost pipe-like shoots come up that can become very enriched with the silver zinc mineralization. And the key is to find where along the structure these ore shoots exist and to stitch them, delineate them, and see if they can add up into a 30 to 50 million ounce resource. So I think this year they can go back to the market and say, we need to follow this up. This has high probability of flowing good news. They need to get the stock higher and financed at a better price than its 8-10 cent price right now. But since they don't need the money until June, they have time to raise the profile of the company. And the importance of Haldane is they don't need to find a 200 million ounce deposit because Hecla would love to have more ore feed for its Keno Hill operation, which is underutilized. So if Haldane starts to deliver evidence that there are 30 to 50 million ounces of high-grade silver ore present, that becomes of great interest to Hecla. So I've got them in there as a kind of silver exploration proxy, and there's a sort of a silver cult out there. It tends to buy companies that have silver ounces in the ground or silver production. But if we really do get a silver market, and let's say it actually unyokes from the gold trend and starts to go up on its own without just tracking a ratio of gold to silver price, then a stock like Silver North Resources would become the silver stock, in my 2025 favorites collection that has a lot of upside potential from discovery exploration.
Why is Silver Range Resources Limited a 2025 favorite?
There are two prospect generator farm out juniors in my 2025 collection, favorites collection. Last week I talked about Eagle Plains Resources. It is completely focused on projects in Western Canada. And there we have the issue that First Nations consultations and all of this is a bit messed up right now, and the overall bear market has discouraged other juniors from farming into these projects because they can't raise any money to mount a meaningful drill program. So Eagle Plains Resources at the moment, beyond chasing its George Lake's existing zinc SEDEX project on a 100% basis, it's kind of at the mercy of the trend in the resource junior sector. Now, Silver Range has a number of projects in Yukon and Nunavut, but that's not really its focus anymore. Mike Power and John Gilbert decided to focus the company in southwestern United States, initially Nevada, and in particular the Walker Lane, where I believe that there is a revival of interest in epithermal systems ranging from the low sulfidation epithermal kind that are associated with hot springs and often have a significant silver component, all the way up to intermediate and high sulfidation epithermal systems, which tend to be peripheral manifestations of copper intrusion, porphyry intrusion systems. And they have a range of these different styles. And Nevada in the past few decades, everything was about the Carlin type deposits, but that's all locked up in northern Nevada through the Newmont Barrick joint venture now, and it's very difficult and expensive to explore for these types of deposits. And with this joint venture, pretty much a monopoly on all the roasting capacity, chasing after Carlin type deposits is a bit of a hard sell. But the arena that Silver Range is pursuing is to go back to these epithermal systems in the Walker Lane, where there are world-class deposits like the Comstock, and start looking at these systems where there's evidence of an epithermal system, but nothing really important was found by whatever shallow drilling was done in the past. In the past 3 decades, the work done by the juniors was to look at the low-grade envelopes around these epithermal systems and see if they can be developed as a bulk tonnage heap leach deposit. And the Hasbrook, that's the flagship of West Fault Mining, which is another one of my 2025 favorites. It's been a favorite for a couple. It's now the 3rd year that it's a favorite. These are sitting there waiting for the right sort of gold price and climate to be developed by some intermediate producer that wants to have a string of gold mines in Nevada. But what Silver Range is doing, it's looking at these old systems. It's collecting whatever data is available. It's going into the field and doing alteration studies and that, and it's trying to come up with a case where if you go deeper here, are you going to find a high-grade gold silver system? And in some of the ones that are that have got the sulfur chemistry that make them intermediate to high sulfidation, those ones may also have a deeper copper porphyry system at depth. And so some of these plays could end up being dual target exploration plays, where you're looking for the high-grade gold silver veins in these systems, but you may also, if you go deep enough, find a significant blind copper system. And a number of companies that are on my bottom fish collection are doing this. So I like this company because it has had success in the past, not so much farming out to Canadian juniors, but rather to an eclectic mix of Australian companies and private American companies. That's a bit subdued right now because we are in such a terrible bear market for the resource juniors. But with their several dozen prospects that they have ready for option, this company is in a position to do a lot of farm outs. Now, normally it does have a bottom fish spec value rating, and it should be in the bottom fish collection. But because of some of the deals that they've done where they've sold projects in Yukon outright 100% and obtained stock, they were able, when one of these went public last year, to actually raise a whole bunch of money to refill the treasury. So they have about $1.7 million working capital, so they're not scraping along the bottom as before. But they also have a 10% equity stake in Borden Mining, which has been struggling now for way too many years to revive the Faro district, which was a zinc mining district, very similar to the Keno Hill situation, which Alexco acquired in 2006, basically by arguing the work we're going to do, putting this back in production, will also reclaim a lot of the mess left behind. And Borden, in the Faro system, to which Silver Range contributed the Keg deposit, it is a similar type of story. But it has been stuck in the mud because one of the First Nations groups in that area has, for whatever reason, not wanted to sign off on, green lighting this for them to go ahead. So the whole reclamation of this area and to create a productive mine in this former district, it has been stuck. And if this thing came public at what they expect the valuation to be, that 10% interest could end up being worth $10 to $20 million for Silver Range, in which case it would end up being a very well-capitalized prospect generator, farm out junior. And of course, the market might not care. It doesn't care about Eagle Plains having $9-10 million in its treasury. But if we do see a change in the attitude for the resource junior sector, Silver Range, if Borden becomes reality, could end up being a prospect generator where all of a sudden they're farming out projects left and right. They're clipping some of them. They're selling 100% and retaining a royalty. They are potentially the future Eli Gold Royalties, whose Trey Wasser had with his landman had assembled a big portfolio of projects all over the place and ended up being bought out for a couple dollars after languishing at 10-20 cents for a very long time. Silver Range is a potential junior like that. So that's why I decided to make it a favorite. It's a multi-bet. There is some evidence that the First Nations group in Yukon it wants something from the government to do with a mining project unrelated to the Faro district. And so all of a sudden the government's in a position to say, well, let's negotiate. Okay, we'll give you permission to do this if you give permission for that. So there is hope that perhaps in 2025, the Faro district finally gets the green light and Borden ends up getting public and Silver Range ends up with a major non-dilutive cash injection.
Why is Sitka Gold Corp a 2025 favorite?
Sitka Gold Corp was one of the few bottom fish from my 2024 collection that actually managed to deliver significant gains. It had started around 15 cents, and at one point it made it above 50 cents. At the end of the year, it was back in the mid-30s, and in the past week, after they did the wrap-up news release for last year's work, the market kind of said, oh, well, we don't like you anymore. So they've managed to drop it below 30 cents. But nevertheless, this company is the potential next Snowline. Now, Snowline changed everybody's attitude about the Yukon in 2022 when a project that others such as Golden Predator had looked at in the past for intrusion-related gold system type mineralization hadn't really come up with anything interesting. But when Scott Bergdahl's group took it on, they discovered on the Rogue project in the Valley area a major deposit for which they produced a resource estimate this year. Now, it's only 157 million tons so far with about 7.3 million in situ ounces, but the grade for the indicated and inferred resource ranges 1.25 to 1.66 gram per ton gold. Now, many of these intrusion-related gold systems in the Tombstone Gold Belt and also what they call the Tintina Gold Belt, which is actually the Tintina province, they're in like the 0.5 to 1 gram per ton range. And Sitka Gold's RC project, which is south of Victoria Gold's Eagle project and west of the Hecla's Keno Hill Silver operation, it was in that sort of 0.5 to 1 gram per ton range. And in 2023, they produced a resource estimate for the Blackjack and Eiger zone, which indicated about 1.3 million ounces at a grade of 0.68. And of course, at $2,700, 0.68 gram per ton starts looking interesting, but the market pretty much shunned Sitka Gold. And even this year when gold was, ramping towards $2,700, it didn't really care. But there was what I call the miracle of 2024 took place on June 24th when Sitka Gold managed to sign off on a deal to acquire the Clear Creek intrusion property that sits in the middle of its claims, just south of the Blackjack and Eiger deposits. And the next day, the heap leach pile at Eagle collapsed, toppling Victoria Gold into bankruptcy. But this deal, the title to this Clear Creek project, overnight had shifted to Sitka Gold. And this property was important because, first, they need more space for infrastructure if they ever want to develop the Blackjack deposit. But it also has it's got an intrusion complex that had shallow drilling in target areas like the Rose Goble and the Pukelman, but it's always been kind of low grade, not very interesting. Now in 2024, they started drilling deeper at Blackjack, and they started to intersect grades in the 1 to 2 gram per ton range. Now it ended up being beyond the open pit limit, so this is going to have to end up being some sort of block caving situation. But if the market ends up starting to take $2,700, maybe even $3,000 plus gold seriously when this becomes a reality, this type of underground resource becomes important. And that's when the stock started to come to life. It didn't really care that much. The market didn't really care that much when they managed to scoop the Clear Creek property just before Victoria Gold collapsed. But when it saw these results, it got excited. And then they also started drilling on the Rose Goble, where Kennecott and others had drilled shallow holes, maybe a 75-meter vertical depth, and had got mineralization, but it wasn't very interesting. But when Sitka Gold poked those holes deeper, they also started to get intersections over 1 gram per ton, and that was within open pitable range. So this company, which has $15 million working capital, attracted as a backer one of the backers of Snowline. By the way, Snowline has like an $800 million billion valuation. It's now in that sort of value trough where until somebody feels the urge to take over a project like that, the upside would only really happen if gold took off and everybody wanted to see lots and lots of ounces in the ground. Now, the interesting thing with Sitka Gold, which the market is ignoring, that the 2023 Blackjack and Eiger resource was based on 34 holes and 11,630 meters of drilling. Since then, they've drilled 72 holes for 25,000 meters, and of that, 27 holes, or almost 15,000 meters, was drilled into Blackjack in 2023-2024. And this is not included in the resource estimate, so this year they will be able to produce an updated resource estimate, plus with all the additional drilling that they've done, they will have a much better understanding of the geometry of this system and be able to put together a resource that the experts are happy to sign off on. So there is the potential to go from the sort of 1.4 million ounce resource to a much bigger resource, because more volume is included, and perhaps at a better grade than 0.68 grams per ton for the open pittable portion, thanks to the additional drilling that has identified some of the higher grade structures within this overall intrusion-related gold system. So Sitka gold is an emerging gold discovery that's about 15% of the valuation of Snowline. It doesn't have the grades yet in a continuous manner that the Valley project of Snowline does, but the location is excellent for development, and with the Clear Creek acquisition last year, they are now in a position to really grow this story in a big way during 2025.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.